Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for an interesting Wednesday. And we're now at the 1st of November, 2023. I'm happy to say we've got plenty of snow on the ground. Accidents all over Chicago, by the way, from the first snow and then the black ice it created. But we're going to be 60 degrees this weekend. So we're just getting into our winter time. For those of you that know, we're a migrant city. You know, it's a sanctuary city. They're going to bring it up on the ballot to remove that because the city's going broke. You can't afford the 40, 50 million a month they're paying the house migrants with no federal help. There's a rebellion going on, and it's not just in Chicago. It's in all the cities like this. But I brought it up because the cold weather. We're now seeing a reverse flow. I've read my first stories today that there are people waiting at the bus stop, and I'm talking to migrants, get me out of Chicago. They've never seen cold like this, and I get it. They're coming from far, far south. They're about the equator, a lot of these people. You got to get out of here, and that is what's happening to a degree. It looks pretty when it's summertime. It's brutal when it's wintertime. And today's market, brutal or not? Okay. Did the Fed chair say anything that you didn't expect? If so, write me about it because I didn't see anything there. I fully expected the Fed would do absolutely nothing. They're going to look over their shoulder. Number two, they are keeping the option open that if inflation picks up, they can raise rates again. They made it very clear that pausing doesn't mean the Fed got anything wrong if they raise rates. The pause is a pause. They're waiting for the lag effect, and they said this in plain English. They're waiting for the lag effect to see what it does to the market and where it goes. They do see wage inflation. They made mention of it. They see it now overall the price of regular inflation, which they view as a positive because they think everything's going to slip back anyways. So that's how they do it. I didn't see one person. Maybe I missed it because I did leave the desk for a moment. Chair Powell spoke an hour. I didn't see anybody say, what's the impact of these auto worker big raises going to have on inflation? I didn't see that at all. I didn't see anybody ask, Mr. Powell, California on the 24th, 2024 January, is going to $20 an hour for McDonald's workers. What's the impact of that? What the Fed did talk about was labor turnover is dropped dramatically. It's down to 2.7% in the JOLTS, but the jobs market is strong. You still have a JOLTS number over 9 million jobs, so it is not weak. It is still a very strong market. And what the Fed's doing is this. Do you see the fingers crossed? Cross your fingers, hope that the lag effect works, hope that the Treasury, and he brought that up, their continual raising of rates will have done the Fed's job for it in part. Nothing wrong with that, okay? I mean, it comes from everywhere. You do realize 3 years from now, 3 years, not a long time, the second biggest item for the Treasury besides paying Social Security, going to be U.S. debt. That's how fast this is all going on. We did get a nice break today because if you saw how the debt is going to be coming out in the auctions, it was much tamer. Remember, we're only doing $776 billion now. Then I think we're doing, 800 and some odd billion for the first quarter of 2024. That's not that big. It's not over the $1 trillion mark that we had. And the market views that as a blessing. All right, tax money coming in, other things helping out. Okay, so is this bullish for the market? I'm going to go back and make my statement. If you look at the S&P, if you if you had bought, not buy, if you had bought, and I brought this up on a seasonal basis, October 26th, the market often makes a run up and through December 2nd. Okay. How many years in a row has it done that? 15. Does that mean it'll be 16? Absolutely not. Past performance is clearly no indicator of future performance. It has value. It tells you it's gone through all kinds of things, and that's what occurred. I, for one, wouldn't fight that. But would I trade off of it? Me? No. I use everything else I have. And if you go to the people that do these studies, that's what they tell you. They say it's there. It's a question of timing. What do you do? They're about the raw data. Okay. On the energy market, where are we sitting? Well, interesting. We still don't see the Israeli conflict spreading to Iran and Iran actively getting involved. Through their proxies, of course, they're getting involved. And as you're watching, Israel's not letting up. In fact, they're ruthless at it. They went to the same area today that they bombed yesterday, hit it again, and they said they got the heads of more Hamas, and that they put themselves, Hamas, right under the population. Nothing that Israel can do, they're going after that. So there are no safe spots there. It's being called genocide by part of the world. I'm not going to say it's good, bad, indifferent. I don't know what it is, all right? It's war. War is terrible. You don't think that's going on in Ukraine? It's going on. It's called war. It's terrible. But that's why there's rules of war and nobody's paying attention to them. It starts with Israel in this case. But they'll look at it. 1,400 people slaughtered, October. I don't want to keep going in it, but that's what this is about. And you got to recognize what it is. And you have to recognize the last thing. There is no solution. I don't know where this goes. It's been going on since biblical times. Why is it going to change right now? All right. So we take a look at the market, and this is what I'm about. Market comes down. We're getting a bounce. We're up 3% for the week so far. You're coming off a huge break in the market. Could this be Santa Claus will come to town? I was asked about that on Australian TV today, and I said I am of the opinion that Santa, with all the bad in the earth, still comes to town. So we'll see if that is going to be the case. But I am not looking for a market up here. Let's understand. A bounce is a bounce. That's what I am looking for. When we take a look at where the market is, all right, where are you in relation to moving averages? Your first resistance is right in front of you. 42.87 and a quarter, the 18-day average of closes, and the combination with it of the 200-day at 43.26. So that 40-point area is, in my opinion, the first resistance point. If the market just kept going, well, then you have another moving average at 44.61, which is the 100-day. And with it, you have the Bollinger Band. They're together there. So that's super strong resistance. But your first reasonable resistance is right over the market, and momentum is up. So certainly, I think the market can make a run towards the 18-day average. Beyond that, we have to see just how the charts shape up. When I come to the NASDAQ, same thing. First, the market held the first test very successfully of the 200-day average with the combination of the Bollinger Band. When they're together, it's strong. And the market gave yourself that lift to it. I look for the resistance there. Same thing in the Dow. Now, we are losing the embedded reading inside of the Russell. Did not lose it on the close today. You're losing it right now. It's not lost until the end of the day. So this bounce is nice, but is this the weakest market? By far. By far. The Fed didn't say interest rates were ready to fall in any manner, if you listen to it. They're stuck here. Higher for longer, I think, is the game plan. You also have to ask yourself, do I think, or you think, if you had a real strong jobs report on Friday, that that's going to make the Fed do anything? Let me give you my opinion. See the hole right there? It's called a zero. I don't think it matters at all right now. We don't have another Fed meeting until we get into December now. They're going to probably get 2 jobs reports. Do I think that even if they were strong, for Christmas, the Fed would raise rates to be Scrooge? I've not seen it. I'm not saying it can't happen. Recently, that doesn't occur. So I'm not looking for that to occur. And that means that as the market comes up, in order for the Russell to go, I think you have to see interest rates fall. And that it's a proxy for low rates because of the nature of the companies. I'm not seeing it yet. It could be. If you lose the embedded reading, I think that it'll rally more. In the 10-year note, well, got a lower low, higher high. Suddenly, that 5% number that people were talking about is a resistance point on the chart. Okay. We go to the 5-year. Suddenly, same thing. you're coming alive. So this big break area is over. I talked about that in my research. I said, this part is gone, and maybe what we do now is the old waffle. And it's not a waffle that you buy out of a truck and you eat, or you go to a restaurant and you get. Chicago, I remember, we had truckloads of waffles. I used to love it as a kid. If you had a penny, it was a penny, you'd go, they put the sprinkly sugar, it was phenomenal to eat. And I remember right around the school, this was obviously, maybe I was in 4th grade, 5th, but boy, I always had that penny for it. And you can see what the market is doing, but I do think it's going to waffle. I think it's going to do one of these, just back and forth like that. In the dollar, I'm looking for some weakness here. One of the things that I said is I thought we were caught in a trading range of the sideways action of the Bollinger Band. You're overbought. You came up there. What's so bullish about anything for the dollar after this Fed meeting? I don't think anything. Now, it did not collapse. Remember, it closed. The settlement time in the dollar is 2 o'clock. The close is 4. So it was listening to parts, not all, parts, most of what the Fed chair was saying. He spoke an hour, so it kept going. So we'll see what the market does when it reopens. In the euro, you get a better feel. The market has come off the settlement, and it is already up 39 points. So that says to me the dollar should be down a little bit. But by the way, let me come back here. This is still very much in a downtrend. Lower highs, lower lows. Hasn't left that. But the resistance is 106. I wouldn't want to risk the kind of money to put a stop over that high to just pick up back to the Bollinger Band if it can get down there. I think you're caught in no man's land for a moment. British pound. You tell me what the Brits are going to do tomorrow. I think they're going to not raise rates, is my guess. The chart doesn't look like it. It looks like they don't want to do anything. It's sort of stuck at the 18-day average of closes, but we'll see. In Bitcoin, I like the long side. I know I said that this morning in my subscriber videos, telling clients that I still think you might be going back up to, then it was 37,000 and change. Now you're 38,000, all because I'm expecting any day a rash where the SEC has no choice but to allow ETFs to trade off the spot. We will see what that does. Is it well taken? You don't discount the same thing over and over. That's the negative to it. There's the old thing, buy the rumor, sell the fact. The rumor was that the SEC would not appeal the court ruling on what they had done in favor of Grayscale with their funds. And now it's just a question to me of when the licenses get issued. Can't imagine what they're going to hold them up on. The differential today between Brent and WTI pulling in. Suddenly, you're back to 441. We had been 460. There's no danger here yet. You'd have to close under 4.25 in order to say, what's going on? Why is that differential really narrowing in? You're not there. Energy prices down, not up. Why? Because the market sees so far that there is no shutoff of the oil. I don't know if you're aware of it, but in the month of August, the U.S. produced a record amount of oil for every day when you smooth it out, 13.05 million barrels a day. And you'll say, but we're not drilling wells. You're right. But they've taken fracking technology. I write about this in my newsletter. I did it about 2 weeks ago. And I said, they have figured out how to get more oil out of the same wells and in some cases recapture what they might have left behind if the gear is all in place. And you're seeing the result of that right now. Now, Russia has also been producing a lot less because they've been in a maintenance. That comes out in gradual steps right now, and their production will go back up. So you got to pay attention there, too. So there's more supply on the market than you need. You are oversold. A lot of support from 83.66 to 83.29 in the Brent. And if that's coming down, you'll go with it on WTI. And supply will say 80.23 to 79.46 could be the next support zone there. Heating oil. I am plain out looking for ways to get bearish under my terms. I don't have it yet. I don't like that if you went short 298.60, you got to risk over $1,000. That doesn't excite me. And in nat gas, I see noise. For the moment, it's on the bull slope. Higher lows, higher highs. We'll see the injection tomorrow. Tomorrow's Thursday. We'll get the injection tomorrow of what the nat gas numbers look like. Warmer weather has been around for a long time. As I just said, we have snow on the ground in Chicago. We're going to be 60 degrees right after this. And this is early November. So cold weather, oh yeah. But we'll see what we have to do. There's a big supply of nat gas everywhere. That is what's going to hang on that market. Now, one of the things I want to remind you is all the different free offers that we have. We made a shopping cart. If you go to our website, iraepstein.com, under free offers, you pick and choose. There's more below this, but when I'm by myself here on this, I can't make it scroll. When I have my help, they can. And you just choose the ones you want. We send you the email, typically within 1 to 2 business days at the latest. And we'll get it out to you, and away you go. Research, charting software, special reports, a couple of free courses in here. Certainly the trading kit, where you get all that stuff wrapped into one, including some of my favorites, which are chart patterns, the popular ones, and then talking about M1, M2, and M3, how to read money supplies, what do they do. You can move your cursor to the top here and give that a click. And with that, I'm Ira Epstein. I'll catch you first thing in the morning. Have a good night.